Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, hi, morning.
Hi. It's a good Friday, right?
Yep.
Salary comes this weekend, long weekend.
3-day weekend.
3-day weekend, and the last of the 3-day weekends for a long time.
And normally I talk about the salary. This time Rima is jumping in as well.
I'm just saying it's a good Friday. It's a good Friday.
It's a good weekend, but we have a lot of work today to do.
Yeah.
And then when you come back next weekend, there are plenty of results that are coming. At least a lot of my companies as well come out of numbers.
Full, Nigel.
Yeah.
Early morning.
Rima starts off earnings and Nigel ends it.
I don't know. It's a fine balance between both you guys, positive and negative. Right? Anyway, it's a good way to start the end of the week because, the handoff from Wall Street is pretty good. You've got U.S. markets, which closed the session at day highs. It was a up and away kind of a session, the slow and steady rise in U.S. markets right from the word go, and it kind of built up all the way into the session. The S&P was up about 2%, the NASDAQ was up 2.5%, so steady march higher. By the way, the S&P 500 has reclaimed the 4100 important technical level. It's what it's also done with yesterday's sharp rallies, that it's broken a streak of 6 straight sessions of lower lows that we saw on the benchmark S&P. And that's a good thing. Technically, it's a good thing. The level being taken out is also good. Facebook parent Meta reported numbers, and the stock was up 14%. Well, large US megatech IT companies have mostly all beaten expectations. Maybe expectations were a little depressed. But even otherwise, even on a year-on-year basis, numbers are looking much better. Meta, of course, suffered because of its own individual problems over the last year and a half or so, and seems like they're coming out of it. Amazon also reported. We'll talk about all of that in a bit. Now, data, right? U.S. economic data. On the face of it, the GDP numbers missed expectations. But you had the detail in the GDP, within the GDP, personal consumption, which came in very strong quarter on quarter. And then you had other data which came through, weekly jobless claims, for example, inflation numbers. They were all strong. It's basically means that when the Fed meets next week for the decision, the FOMC decision, it perhaps will be an uncomfortable hike because it's still at the margin. But if you want to kind of say whether the data is hawkish or dovish, it clearly is. It leans on the side of hawkish. It's not dovish. It just still shows you the strength in the underlying U.S. economy. Bulk of the data that we saw overnight. Now, of course, what does this mean for stock markets is another thing, because recessionary fears have taken markets down previously, but so have inflationary fears. We are in that kind of a twilight zone where perhaps we are transitioning from a high inflation environment to worrying about perhaps at some point in the future that growth will start to taper off. All right, let's come to the markets here. Lots of IT earnings here in India post-close, and Rima will discuss this in greater detail, but most of them have missed expectations, unlike what we saw day before yesterday. On the indices, Nifty has closed above the 17,863 level. I've mentioned this over and over again. Finally, we've got to close above it. This is nothing but the 61.8% retracement of the entire fall from the all-time high to the recent low. 18,100 is the next target, which the market needs to kind of... I think the market will set its sights on 18,100, let's put it that way. For that to happen, though, the market needs to keep supports around 17,775. There's an upward sloping channel. The lower end is at 17,775 now on the Nifty, and that's the number to defend if the upsides have to remain. So far, we've gotten smaller dips over the last few sessions, which have been bought into over the course of the session. On the Bank Nifty, it closed above the 78.6% retracement of the entire fall. Supports there are at 42,800. I'm not putting upside level. Let's see how things pan out. The Banks index has been the stronger of the two indices. But on the downside, 42,800, the lower end of the rising channel, needs to be defended for this up move to continue from here on as well. So pretty good session overall. And you've got the tailwind from the US market as well. How much of the IT earnings will impact, local IT earnings will impact the mood here, I think is the question which we will begin and grapple the day with. Rima.
On that subject, Wipro ADR actually closed up with a gain of 4%, right? Given the rub-off that we've seen from NASDAQ. So yes, the IT earnings from the Indian pack have been a bit disappointing. generally there is a positive tailwind to tech companies. But Asia's feeding off the strong session from Wall Street overnight. Remember, the S&P 500 and the Dow had their best session since January. And look at Asia this morning. Hang Seng is up nearly 1%. The Chinese markets are up 0.6%. Nikkei is up close to about 0.5%. Across the board, you've got green on the screen. And the SGX Nifty is suggesting a positive start of close to about 75 points. Just to talk a little bit more about technology, since that's the hot topic. Now, Meta. Now, Meta closed out with a gain of 14% yesterday. It's up 170% from its November lows. Two key reasons. One, after 3 successive quarters of a revenue decline last quarter in Q1, Jan to March period, Meta finally grew. Meta revenues were up 3%. It's still just a dismal 3% growth, but it just gives a sense that the worst is behind. And plus, the street is applauding the cost-cutting efforts. Secondly, Amazon. Amazon, at one point of time, was up nearly 11% in trade yesterday. It finally ended with a gain of 4.5%, but it slipped very sharply in after-hours trade. From 11% gain in trade, it finally ended down 2%. And this is very critical because what they said in the conference call is that their cloud customers are optimizing tech spend. The AWS revenue growth was 16%, so it's come off from the average of 35-40% it used to see over the last couple of quarters. And they went on to say that in the month of April, growth was even lower. So cost optimization of cloud spends continues. Now, what's the rub-off impact of these FANG stocks on Indian IT? Well, Meta's business model is very different from Indian IT companies. They get their revenues from Instagram, Facebook, advertising. But what AWS has to say about the cloud is very important because an enterprise buys cloud product from AWS, but then to transition, to make the migration and to provide services on that cloud, they will go to Indian IT companies. So what AWS has to say is far more important. And just to quickly wrap up the Indian IT earnings overnight, for Wipro, weak Q1 guidance. Tech Mahindra, it was a margin miss. For LTI, Mindtree, very weak revenue growth compared to street estimates. And for Emphasis, their banking exposure has resulted in the second consecutive quarter of a sequential revenue decline.
All right. Thanks, Rima, for that. I'm looking at trade setup and just wondering at the start of this May series, will we miss those shots? Because April was a stellar series. Out of nowhere, we had closer around a 5% gain on the Nifty. We had 4 straight series of negative numbers, closer around 1% down. We were down 2.5% odd in the previous 4 series. So it was good to see a break from that, and we ended on a winning note. More importantly, to give you a sense about how good the series was, yesterday the final tick was the highest that we saw in the entire series. So April was very, very good. The question is, will we miss those short positions from the FIs in the May series? And I'll tell you why. Just pull up the chart. You look at the start of the April series, the FIs were aggressively net short. And that's one of the reasons why we bounced in style. Now the short positioning is at around 59%. So mind you, they're still net short, but not to the extent that they were, anywhere close to that. And if you're looking at the net short positions, just pull that up. At the start of April, it was close to 140,000 contracts on the short side. That's down to only around 20,000 contracts. The short point that I'm trying to make is this market is not net short any longer. And that was actually a bit of a cushion, any kind of good news, and you would see a bit of a spurt on that. On the option side, well, the FIs have written and bought equal number of calls and puts, so let's not look at that. Option side, 17,800, 17,700 put, both of them did see writing in yesterday's trading session. So the 100 EMA becomes important on the downside, 17,814. That'll be the first stop loss on the downside. Resistance, though, comes in at around 18,050 to around 18,100 because in February, 17th of February, we went to around 18,034 odd. And from there, we did a bit of a U-turn. So I'll be watching that range, 18,050, 18,100. I expect some supply to come in at those levels. On the Nifty Bank, which way of 43,000 are we going to swing? Yesterday, we ended bang at around 43,000 odd. And there's writing being seen on both sides. So on the upside, you're looking at resistance at around 43,300. While on the downside, support is at around 42,600. And I say this because on the way up, 42,600 was a bit of a resistance. How to approach trade, though? As we've been mentioning, there's a long weekend coming up. You have the Fed meet that's due next week. You maybe have IT stocks that may not support the index. They could be a little bit under the weather. So stay long on the index. That could be the call. But taking some money off the table on the index, I think that'll be a bit of a prudent strategy. SGX, if you're suggesting a 70-80 point gap up, maybe taking some money off the table will not be such a bad idea. But let's see how this one goes.
Okay, let's tell our viewers then what the call is on emerging markets. Christopher Wood of Jefferies says, greed and fear's global long-only portfolio is at the risk of not being exposed to the next bubble, though less so in Asia ex-Japan long-only portfolio, given the 8% weightage of TSMC and Samsung Electronics. He says from everything greed and fear has heard, if there is one AI play to own, it is NVIDIA. As a result, he says greed and fear will allocate a 5% weightage in NVIDIA in the global portfolio. The new investments in global portfolio will be paid for by removing investments in Standard Chartered and Saudi Telecom and by shaving the investment in HDFC Life by 1 percentage point.
Rima, that line, the global long-only portfolio is at risk of not being exposed to the next bubble. I think it needs some a little bit more context, which we will try and provide for our viewers as we go along. But that's an interesting phrase of words. Well, let's get you some money market views on the rupee. We have Lakshmanan V, Federal Bank, who says that the rupee has a strong momentum and traded around the 2-month high against the dollar yesterday, while the euro traded near its yearly high, supported by equity inflows. However, upside for the rupee is capped owing to potential forex reserve buying. It goes on to say, with softer US GDP data and FOMC due in 5 days, Lakshmanan expects the rupee to trade in the $81.5 to $82.25 range.
On the bonds, Lakshmanan of Federal Bank says with US PCE, PCE stands for Personal Consumption Expenditure data coming in higher than expected, domestic yields may likely sink with any up move in US yields. He expects the 10-year benchmark bond yield to trade in a range of 7.1 to 7.17%, and the market will now await the next week's FOMC for further direction.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. But for the time being, let's run you through the stocks. Axis Bank, Indian Hotels, PI Industries and Raymond. They are stocks on the back of positive news flow. And after a while, we have more number of stocks that could potentially react to negative news flow. Today, you have Wipro, ACC, Tech Mahindra, LTI Mindtree, Shriram Finance, as well as Godrej Consumers could be reacting to negative news flow.
Okay, on that note, we'll slip into a very short break and we'll come back and talk about all these top 10 stocks. Stay tuned. Welcome back. Let's now talk about the CNBC-TV18 top 10 list of stocks for the day, and our entire team is here. And let's start with the big boy, Axis Bank. Abhishek is here to tell us more about how the quarter looked. Abhishek.
Well, Rima, it's better than expectations on many fronts. So if you take a look, the watch list, that's declined to 0.65% of the loans, perhaps at a 7-year or 28-quarter low. So deposits are up 15.24% YOY and about 11.65% sequentially. Advances are up 19.5% YOY and about 10.9% sequentially. Both these numbers do have the Citibank's India's retail consumer business numbers as well. Net interest margin came in at 4.22%. Phillip Capital was expecting it at 4.16%, so the net interest margin decline is much better than analyst expectation or lower than analyst expectation to say. Provisions were at close to 12,800 crore. This includes one-off provision that they have made for Citi's acquisition that they did in March, which is about 12,400 to 12,500 crore. Asset quality, the total slippages came in at about 3,375 crore. Analysts were working with a number of 4,000 crore, so much better over there. Annualized slippage ratio is at 10-quarter low of 1.6%. Asset quality is also good, given the fact that gross NPA ratio is at 2%, which is at a 28-quarter low. Net NPA ratio is less than 0.4%, perhaps at a 31-quarter low. So in terms of their performance, the NI is slightly below our poll. However, the loss is in line with our poll. Back to you.
Okay, all right, Abhishek. Thanks a lot for that. So going a little bit of green on Axis Bank. But Rima, the big tech numbers, Wipro, the numbers looked weak, but the problem was the guidance, right?
Absolutely. So for Q4, the company has clocked in a revenue decline of 0.6%. But the problem is the next quarter's guidance, -3 to -1%. The street was anticipating a flat guidance, -1 to +1. So in that context, the guidance has been very dismal. But the silver lining is a very large buyback, 12,000 crore of a buyback, a tender buyback at a price of 445 rupees per share. Kotak says the value at the valuations of 15 times forward multiple FY25 EPS, the stock is not yet cheap enough to warrant a relook. The stock may hold up in the short term courtesy of buyback. So the numbers are weak. The buyback is good. But just want to put on the table that Wipro ADR actually ended with a gain of 4%. There you have it. We caught up with the management of Wipro earlier today to talk more about the outlook, what went into this dismal guidance that they've given it for the next quarter. Listen in to what they had to say.
In some sectors, in some industries, certainly banking, financial services, also the technology sector, where what we're observing is that there is a certain reduction, slowdown of the discretionary spend. And that is, definitely generating a little more of uncertainty on our top line for quarter one. Not one single project got cancelled, not a single project, there's I would say there is not one event that would have any material importance to the guidance for Q1. We haven't seen any cancellation of deals. We haven't seen any delay in the ramp up. What we are seeing is, some of the deals, discretionary spend, if you like, is being either slowed down or spread. And so we are seeing a reduction of this discretionary spend in our accounts.
As I look at next couple of quarters, as you can imagine, our priority is really revenues and how do we convert the deal wins into revenues, how we get to a strong growth trajectory, steady state growth trajectory back. And hence our commentary is that we will try and maintain margins around the range that we have delivered in recent quarters.
We have not reduced anybody's salary. We had spent time in investing in people who were freshers and trained them. And at that point of time, we gave a choice to these freshers that those jobs were not available open immediately, but there are certain other jobs which are open immediate right now at a lower salary. And the choice is yours. You can continue with your existing offer and wait till we onboard you, or you can choose to come and join us at this role which is required now. And you'll be surprised that 92% of the people chose to join immediately. So I don't think so. It's a wrong interpretation that we have reduced anybody's salary.
Okay, well, that is Wipro, and in line with subdued earnings, we had numbers from Tech Mahindra and LTI Mindtree as well, which came through. Rima, tell us more.
Well, for Tech Mahindra, the miss is on margin. So the top line revenue growth has come in at 0.3%, largely in line with street expectations. But the margins have disappointed. EBIT margins have come in at 11.2%, lower than the 12% that they clocked in the prior quarter. And plus, there is an impairment charge of more than 200 crore rupees. If you add that to the bottom line has fallen by nearly 14%. So there is a margin miss, which is hurting. And secondly, the deal wins have been holding in a band of above $700 million for the last many quarters. But this time, deal wins have fallen by 26% quarter on quarter and 41% year on year. And now it's below that run rate of $700 million to $1 billion. LTI Mindtree, the growth has disappointed the street. LTI Mindtree's growth at 0.7% is lower than consensus expectations of 2%. And if you compare it with the rest of the mid-cap IT companies, you would see the growth rate is actually significantly lower. But bear in mind that LTI Mindtree is much larger than other companies like a Persistent or a Coforge, almost 4.5 times the size, but the growth rate is slightly on the lower side. That said, in the conference call yesterday, they have guided for double-digit growth. So that's fairly aggressive. So the street is going to be watching whether they will be able to achieve it. In fact, we will be joined by the management of Tech Mahindra, MD and CEO CP Gurnani, CFO Rohit Anand at 8:35 a.m. to discuss the Q4 outlook, the outlook on the margins and the way forward.
Okay, all right. Well, let's get back to a couple of other earnings. And Abhishek's still with us to tell us about Shriram Finance. Abhishek, those numbers a little bit disappointing?
Well, it was a soft number in terms of the P&L performance that they saw. Business momentum remained healthy. So disbursements grew by 6.2% quarter-on-quarter. Q4 is seasonally a strong quarter, and despite that, the single-digit growth on a sequential basis does not augur too well. However, let's take it on stride. AUM growth is at 4.5% quarter-on-quarter. Asset quality has seen marginal improvement, 8 basis point decline seen in gross NPA ratio. The net interest income growth is just 0.4% quarter-on-quarter. OPEX, that also increased by almost 21.2% sequentially. Now, they had amortized 300 crore of expenses at one go. Going ahead, they'll amortize 75 crore per quarter in their OPEX. Provisions, that increased by almost 29% quarter-on-quarter. That was largely to do with the fact that over there also there is a one-off expense of 294 crores, which they made provisions on the book as per their own clarification and as per the external audit that they had done over there. Net interest margin remains stable. However, PAT is down 26.4% quarter-on-quarter. So you can expect a weak opening in trade today for Shriram Finance. Back to you.
Okay, and we'll put some of those questions to Umesh Revankar, the Vice Chairman and Managing Director of Shriram Finance, who will join in to talk about the numbers at 9:40 this morning. Join in for that conversation. Indian Hotels is next up. Surabhi is here with details. Surabhi, morning.
Indian Hotels Q4 numbers were a positive surprise. They were a beat on all parameters, and they ended FY23 on a very strong note. The revenue was up 86% on a year-on-year basis, came in at 1635 crores. The EBITDA was up 3.3 times when compared to last year and close to 6% above estimates. Margins came in at 33%, 100 basis points higher than Motilal Oswal expectations, and PAT was close to 23% above estimates. They have seen sequential improvement in their average room revenue as well, close to 8% higher when you compare it to their Q3 levels, and the occupancy was the same as Q3 at 71%.
Okay, the number which is telling is the average room rent. Quarter on quarter, it's gone up by 7.5%. The number was 10,700 approximately in Q3, which is anyway a seasonally strong quarter, and it's now gone up to 11,500 crore. And in Q1, which is anyway a strong season because of summer holidays. Let's see what that number looks like. That's the average room rate, ARR. But let's talk about PI Industries, 2 large acquisitions done by the company to enter in the pharma space. Ekta's here with the details. Ekta.
Thanks for that. Well, yes, PI Industries will be in focus because they made 2 acquisitions, which is going to finally help them enter into the pharmaceutical space. The funding will be via the cash as well as the QIP proceeds that the company has. So they will be acquiring Therma Chem Research Medilab for around $50 million. And there will be an additional $25 million possible payout in performance-linked payouts over the next 6 years, with particular to this company. It provides services in the preclinical and clinical stages. Consolidated revenue is 33 million for FY22. Normalized EBITDA 14 million. The other acquisition is an Italy-based company for 34 million euros. It is a small API manufacturer plus CDMO. Revenue $45 million, EBITDA 7 million as of CY22. The overall impact is that the company is looking to build a differentiated CDMO offering across the pharma value chain. Remember, they have tried to make a foray earlier. In 2021, they had the InSwift Lab acquisition, which didn't really go through. And hence, the street is now looking for this particular acquisition as a positive, as it will address growth concerns. It is going to be earnings accretive. The valuation seems reasonable at this point in time. Hence, you can expect the stock to probably be in the green.
All right. Ekta, thanks very much for that. PI Industries, some acquisitions, and hopefully we'll have the management with us a little later. Well, let's get back to Surabhi. She's got details on Godrej Consumer and Raymond. The deal was announced yesterday post-market hours. Surabhi, over to you.
That's right. So CNBC-TV18 News Break is now confirmed that Godrej Consumer is going to buy Raymond's FMCG business in an all-cash deal for 2825 crores. Now, this business is being sold to GCPL along with trademarks of Park Avenue, KS and Kama Sutra. Nuama says that 80% of Raymond's FMCG business comes from deodorants and 20% comes from sexual wellness, with gross margins of 50% and EBITDA margins of 6%. Raymond's consumer business has done 411 crores of revenue in FY21 and scaled it up to 622 crores of revenue in FY23. Now, the view on the street is that this acquisition is slightly expensive at 4.4 times sales and 73 times EBITDA. Just to give perspective, Emami is currently trading at 5 times EV by sales. Now, the deodorant space has historically been very competitive, and that's visible in Raymond's weaker EBITDA margins as well, so that's an added concern. We'll have to watch out for how Godrej Consumer's distribution can scale up the business and deliver growth in an under-penetrated segment of deodorants and sexual wellness.
Thank you very much for that, Surbi. In fact, my colleague Yash Shen asked the management of Raymond about the rationale behind the valuation. Listen in.
At the Raymond Group, we believe very strongly in managing and nurturing our business. And in our demonstrated performance, every single business, we have demonstrated growth, margin improvement, and that reflects in the value creation of our business.
Would you say it's a good deal for Godrej Consumer or a good deal for you?
Nobody does a deal if it's not good for it. Okay? You must look at a win-win. 100 rupees in your hand has a different value than 100 rupees in my hand. Should I have got 300 crores more? Yes, I could have got 300 crores more. But by getting 300 crores less and getting the deal done, see what I will achieve on the demerger. If I get that done, I won't make 300, I'll make 500 crores more. From their point of view, you might think they've overpaid, but they are smart business people. They know what the potential is. Sometimes you don't pay for the product, you pay for the potential. And if they just take it and plug it into their system, they have a growth plan. And they're very smart people, they've done extremely well, I know them extremely well. So I think this is genuinely and I passionately say it, genuinely a fantastic win-win deal.
Okay, Raymond believes it's a very good deal even for GCPL, though analysts are not convinced about the high valuation paid of 4.5 times EV to sale and the fact that the acquired company has EBIT margins of just 6.5%. So very low in terms of EBIT margins, and this is a very highly competitive space. Let's quickly recap then some of the top stocks. Stocks with positive news flow are Axis Bank, Indian Hotels, PI Industries, Raymond, while stocks with negative news flow are the tech companies, Wipro, Tech Mahindra, LTI Mindtree, Shriram Finance and Godrej Consumer. And in a bit, we'll also talk about ACC. But as before that, let's go across to Manisha. She's waiting by and she's going to give us a complete roundup of all the action from the commodity and the currency space. Manisha, hi.
Thank you so much for that. Well, I'll start with the crude oil prices, where we have seen prices steady, actually 0.25% higher in the Asian markets right now. And this is after Russia says that the global oil markets are in balance. But even with that correction and that statement, we still are looking at the crude oil prices headed for a second weekly decline. Remember, prices fell 5.5% in the previous week. They're down 4.5% in this week as well. There are global demand growth concerns, and especially with the U.S. first quarter GDP numbers coming in much lower than previous quarter and lower than the street expectations, seem to be weighing on not just on the crude oil prices but metals as well, where we have seen copper prices now decline to a 4-month lows. There are weak demand concerns coming in from US and China, and that seems to be weighing on aluminum, zinc, nickel, most of these metals trading on the lower side of their range.
All right, Manisha, thanks very much for that. Copper in focus and commodities overall as well. Let's just have the SGX up. I mean, it's reflecting the enthusiasm which we saw overnight. And we are almost, the last I checked was we were up about 70, 75 odd points. Should come up again. We've got 85 points in it now. So almost at about 18,100 kind of levels, which is around where the next targets typically on a technical basis would come in at. So is the rally going to get a little faster, going to pick up pace is something which we will have to talk about. Nishal Maheshwari of Centrum Broking will join in for some specific conversation on individual stocks. A little later, as we highlighted earlier, Tech Mahindra's management will be with us to talk about the numbers and, of course, the future outlook. Stay with us.
Welcome back. You're tuned into Bazaar Morning Call. Hope you're having a good morning. We've had a very, very good April series with the Nifty gaining close to around 5%. Now we are bracing for a fresh start to May series. And in fact, for starters at least, we're going to open up well in the green. There are plenty of stocks that we're going to be talking about. Nishal Maheshwari will be joining us in just a bit. But first up, let's tell you about ACC's numbers. Well, on the top line, there was a beat. You had revenues coming much better than what our poll threw up. But the volumes were much better. Volumes came in at around 8.5 million tons, or no one on the street was anticipating this sort of a number. A couple of factors could have played out. One is the push for volumes. Remember, the Himachal Pradesh unit was shut for bulk of the quarter. And the second factor could be there were intersales between ACC as well as Ambuja Cement. So we'll require some clarity on that front. But that's the reason for the top line beat. Margins were disappointing though. Missed our estimates by more than 150 basis points because realizations were lower by around 3 to around 4% sequentially. And the RMC EBIT, well, it turned into the red after 9 straight quarters of reporting in the green. So that's one of the reasons, though the company has made various steps to reduce cost. The profit number was a miss, but that was because of an exceptional item. That's a restructuring cost. And for the last 2-3 quarters, we have seen that. So we'll want some clarity on that as well. Otherwise, the other factors that played out, the auditors, they have issued a qualified opinion because of the ongoing SEBI matter as well as the investigation. And the management says that they have a lot of cash in their books, which is true. But the only thing is some clarification will be required because all the cash is moved into other financial assets. So where exactly have they deployed that? Expect the stock to open up in the red, but because of valuation support, maybe some bottom fishing could come in at lower levels.
All right, that's an interesting one always to keep a track of. By the way, we have a cement company also in the lineup in the next 2.5 odd hours or so. Sri Digvijay Cement will be joining us to talk to us about all things cement pricing, especially there. Well, Tech Mahindra is the company we are focused on. Weak set of numbers in the fourth quarter, and as promised, the management is with us. My colleague Rima caught up with Tech Mahindra's Managing Director and CEO, CP Gurnani, and Chief Financial Officer Rohit Anand. Began by asking them about the quarter gone by and how they see margin trends going ahead. Listen.
There is a drop in margins, but to me it is all temporary. I think you would see an upward tick because our investments will yield better results as we get into the next 2 quarters. So overall, I can only say, good time to invest, and Tech Mahindra is investing.
Rohit, can you explain this 80 basis points margin drop?
On margins, the headline number shows 80 basis point reduction, but there's a close to 60 basis point headwind that you saw from FX. Last quarter, if you remember, we saw a similar tailwind on FX that got reversed this time, the opposite side. So if you normalize for that, at a constant currency, it's just a 20 basis point drop. And when you correlate that with direct cost versus SG&A, you'll see our direct cost is down and our gross margin is up, adjusted for currency. And that got offsetted on a CC basis by SG&A to the investments that CP is saying that we continue to invest. It's very easy to pause long-term investments and within the organization, but we decided to continue with that, and some normalization of costs that happen in 4Q, which will ease down as we move into 1Q. So that was main of the reason. It's driven by SG&A than really the direct cost, which has given us the benefit this time.
What's the guidance on margins, Rohit? Currently 11.2%. Where do you see it headed in the next 2 quarters?
As CP mentioned, I think we, of course, as a company, don't give a guidance formally and a policy, but as he mentioned that we'll continue to invest, and based on those investments, we see next year overall the margin heading positively, and we have multiple levers that we are continuing to work on. Basis all that, our view is that will move in the positive direction from where it is right now.
CP, can you talk about the deal wins? Your deal wins were in a run rate of $700 million to $1 billion. It's fallen to $582 million. What's happening on the macro front in terms of the deal wins, the deal pipelines, the slowdown, the cutback in discretionary spending, and across which verticals?
No, I would not read too much into $600 to $700 million deal win, because we all know that the funnels are good. Overall, the IT demand is still very, very high, And particularly for us, because we are also invested in network services, we are also into the content creativity side through XDS. So I think it is just a quarterly dip, but overall on an annual basis, I'm very confident that the previous year, which is FY23 closing, we had done 3 billion. Since we do not give indication, but I can only tell you is that it will be far better than 3 billion in FY24.
Okay, so FY24 deal wins to be better than FY23 deal wins of $3 billion. Rohit, any deal cancellations or deferrals?
No, we haven't seen any specific cancellations. In terms of decision making, there is a slight delay in finalizing and closing deals, which is reflective in some of these differences that you see, but it's not material right now. So hence, overall, as the broader context CP articulated, our pipeline continues to be robust, and the discussions with customers are moving in the right directions, which gives us a view overall from a positive standpoint on FY24.
CP, retail has seen a 10% drop sequentially. Can you explain what happened?
I think retail is clearly a sector which is, it's a weakness in consumer demand right now. They all had a good Thanksgiving. They all had a good Christmas, and after that there is a clearly, and we, to be honest, I mean, I expect the slowdown to continue in retail, but at the same time, as I said, we are diversified. If retail slows down, we will be focusing more on healthcare, or we will be focusing more on insurance. I mean, so there will always be a realignment, but I do believe that retail is one of the biggest consumers of technology, and they will come back.
Rohit, one final question.
And some of it is expected, right? Because it's a seasonality quarter for us from a retail standpoint. So it was expected for that to go down. But as CP mentioned, that continues to be a pressure point based on the overall segment dynamics right now.
Any other pressure points apart from retail that you see in the environment currently? And if you could just quickly explain that impairment charge that you've taken of more than 200 crores.
Yeah, so impairment charge is one of our older platforms that we had, where the carrying value of the investment based on the future cash flow was not substantiated when we reviewed it as a part of our annual cycle. And based on that, we've taken the right prudent call from an accounting standpoint and impaired that value to reflect the future cash flow of that asset. So that's what's flown in through from a one-off impairment charge this time.
That is the Tech Mahindra management. Let's find out what the outlook is from an investor point of view. Nishal Maheshwari, CEO, Institutional Equities and Advisory at Centrum Broking, now joins in. Nishal, thoughts on Tech Mahindra? Because here valuations are relatively cheaper than the rest of the pack. And secondly, Wipro, where there is a large buyback support. 12,000 crore means the acceptance ratio for retail investors will be on the higher side. Do these two factors convince you to take a look at names like Tech Mahindra and Wipro?
Thank you, Rima. Thanks for having me on the show. I think a set of disappointing results for both the companies, actually, and a bit more disappointed with Tech Mahindra because the margin compression is quite a bit, actually. And Wipro, obviously, I think for several quarters has now been sort of a flattish top line growth. So I'm saying outlook still continues to remain pretty weak. And if we are looking at a sort of a recession hitting the US in the third quarter or the fourth, then obviously I think the outlook for the whole IT industry is not very strong. So I would go and stick with the top guys in the industry, TCS and Infy, and then only possibly HCLTech. These are our top three picks. So I think for the moment, avoid Tech Mahindra and Wipro.
All right. Hi, Nishal. What about ACC? You know, those numbers, they were a bit of a miss, but I think ACC now the street wants to look more into the balance sheet. You know, there's constant, besides the profit and loss account, we're looking for other factors as well. How would you approach the stock valuation wise? $90 per ton, but numbers are still far from impressive.
So I think in the last 2-3 quarters, ACC, sometimes it's the margin, sometimes it's so one thing gets right, the other things falls. Basically, this time the volumes have been good, 10% kind of volume growth. Basically, I think that is better than the street expectation. Our expectation also was something like 6-7%. So I think the volumes are good, but then the margins are lower basically because of the cost. The realizations are lower basically. So that is where, so I'm saying they are still getting their act together. So I think, yes, valuation is interesting at $90. But I think the company needs to get its act together basically with the new management in place. But yes, I would recommend basically at these prices to accumulate.
Accumulate at these levels. That's the advice coming in. Nishal, any thoughts on, I don't know if you have coverage on PI Industries with the acquisitions which they've made. Do you track it?
Yes. Morning, Prashant. We track it. We have been very positive on the company throughout actually for like almost 5 years now. And we continue to see a very, very positive outlook for the company. I think this is has been long expected. If you remember, they raised this 2,000 crores. I think almost a year back, the company was on the lookout. I think in between they were trying to acquire in Swift Labs, which didn't go through. But I think this deal really puts them into, besides the chemicals now in the pharma sector also, I think on the CRAM side of the business. This is what they have been guiding for some time. So I think this is a pretty positive step, basically.
Okay, all right. Nishal, not sure whether you had a chance to look at this Raymond Godrej consumer deal. I was reading a couple of reports. And for Raymond, it's a good deal because they're getting money. So how much of that is in the price? I'm not sure. The stock is up 40% in 1 month. For Godrej Consumer, though, Jefferies note suggests they're still wondering why this sort of an acquisition. And in the past, some of these acquisitions haven't worked out very, very well. Though valuation-wise, they say it's pretty okay. What's your view? Godrej Consumer, do you view it negatively or do you say par for the course?
I think par for the course, basically, because Godrej obviously has a much larger distribution network. And I think the brands are good, basically, all of them. I think they are very, very niche brands, whether it is KS or the Park Avenue brands, basically. I think what it requires is a much larger distribution. And I think Godrej has that muscle. So definitely, I believe, basically, this is a good acquisition by Godrej. And they would be able to scale this business up.
You're not worried about the low gross margins or the fact that it's expensive?
So it all depends upon basically the kind of volumes you are able to generate. So obviously, if your top line goes up maybe 2-3 times from here in the next 5 years, all these margins will be much better, basically, as you know, basically, because the cost of producing all these goods are not very high. So leverage is going to pull in basically in this kind of a company. And I believe Godrej is a very, very efficient company. They will definitely do justice to this.
The gross margins anyway for the acquired companies 50%. So the gross margins are pretty healthy. It's just about converting it into operating margins. Nishal, Axis Bank, how did you like the numbers? And now that we've got a picture from all the large banking numbers except Kotak Mahindra Bank, how would you rate it in order of preference?
So I think all the banks have done pretty well, basically, which was expected in the last. This is I think possibly the last quarter where I think they have been able to hold on to their NIMs, because I think from this quarter onwards, as we see, basically the cost of deposits have started going up. The positive side is basically all these banks are pretty well capitalized. There is no credit cost on the foreseeable future. So I think for the next 1 or 2 quarters, this is going to be a really good time for the banking sector. Yes, maybe the top line, the credit growth may not be as strong as what we've seen last year. But definitely, I think a good time for the banks. Our preference still remains to be ICICI, Axis, and HDFC in that order.
All right, Nishal, we'll take a quick commercial break here. Stay with us. We are back. There's about 13 minutes to go for the pre-open session to kick off. Stay with us. Okay, welcome back. The ASX Nifty is indicating a higher start by about 80 points or so. We're at 18,071. How things change in a week. Last week was looking sideways, dismal. People were starting to doubt whether the previous 1,000-point rally will last. But with this week, I think most of those doubts have gone away. Anuj is here to tell us what he's making of things. Anuj, morning.
Morning, Prashant. Of course, long weekend coming up, 3-day weekend, so that could have its own ramifications. But the trade setup still looks quite strong. FI starting the series with 41% long exposure. Remember, this number was 9% when we started the April series. Net shorts at 20,000 contracts versus a peak of near 2 lakh. It's really been short covering rally. In fact, if you look at the market-wide rollover, it's very strong. But within that, there's a story. The Nifty rollover is only 64% because it's seen aggressive short covering. Bank Nifty better at 82% and stock futures at 93%. The other example of this short covering is at the start of the series, the Nifty futures open interest is 89 lakh shares. Last series, it was 1.53 crore. So 32% reduction in Nifty futures open interest. Last time when we had this was in October 2020, which was, by the way, a very good series after September 2020. So gives me hope that, this month could see a bit of an encore. In fact, the parabolic phase or euphoria phase for the market is still to happen, could happen in May. The Nifty numbers, it's clear for you. Market has been making higher lows. So it's been a positional trader's delight. Every day the low has been improving. If you look at the last few days, barring one day where it was almost similar to previous day, which was on 25th April. Otherwise, from 17,553, the low has moved up to 17,797. The next big resistance is 18,032. If you cross that and close above that, then straight move to 18,500 is possible. On the Bank Nifty, we had a very strong close, 43,000. I've been talking about this point that at some point in May, you could test all-time high. We are now 1150 points away from that. And even 45,000 is possible in May, purely going by the kind of momentum that we have in the Bank Nifty now.
Okay, all right, Anuj. Thanks a lot for that. And good long weekend coming up. So let's hope, things get over today and then we're off for that. But that's the final long weekend we'll have in quite a long time. Well, let's get in our technical guests as well back with us. We have Mitesh Thakkar as well as Shrikant Chavan. Good morning, gentlemen. Thanks so much for joining in. Splendid April series. Things look very, very good. Can we continue in May, though? Mitesh, let's hear your view first. What do you think?
So, good morning, Nigel. I'm not sure whether this rally will extend for the entire month of May, but I think, what is very clear is that the immediate term or the immediate trend is on the upside. So at least enjoy it as long as it lasts. And I would now look at, Nifty possibly heading towards that 18,000 zone. There is a couple of pivot points around the 17,980 to about 18,050 levels, and then one at about 18,250. But I think the immediate trend is positively biased. And therefore, the idea is that, we should be trading on the long side. Having said that, I would also suggest that, any declines, if they happen during the day, I think would be buying opportunities. And similarly, the Bank Nifty between the two is the mildly stronger index. And therefore, I think, that could do well. And hold on to your long positions and use declines to buy. I think that remains the standard blueprint.
Okay, use declines to buy. That's the standard blueprint. Shrikant, good morning. What are you making of things? And what kind of targets and trades would you want to put out? Index first.
Yeah, Prashant, good morning. I think, see, the markets are very clearly into uptrend, but the way the market has extended its rally, and now we are going to see opening somewhere close to 18,000. Around these levels, the market is having a good amount of resistance in terms of option statistics, in terms of technicals, extensions. So here we should look for avoiding chasing index, at least at these levels. We should be more and more stock specific. But yes, if there is any correction during the week, then certainly we should look for adding some positions close to 17,800 or 750 levels. But at these levels, we need to be more and more selective. For the Bank Nifty, there also we feel that 43,000, 43,200 is the zone where we may see some profit taking. But on the downside, 42,700 acted as very good support. And there, I think the market can again come back in the current expiry. So we should be buyer if there is any correction. Otherwise, at these levels, we should be more and more stock specific.
All right, so let's hear your stocks then. Shrikant, what do you have for us?
Yeah, I would like to go with Bajaj Finserv, which is currently trading around 1350, 1360. There are like a couple of things which are really supporting to the overall pattern of the stock. We like the positive divergence and the RSI formation. So based on that, we are expecting stock to move towards 1450 or 1460. So at these levels, it's a buy with a stop loss around 1310. And the other stock on which we are bullish is Mahindra and Mahindra. The reason is because the stock is forming some continuation formation on daily basis. So from here, the stock can move to 1260 or maybe 1280. We should look for keeping stop loss somewhere close to 1200.
What about Mitesh, your trades?
Morning, Prashant. I have all buy calls today. The first one on the list for me, that's Ashok Leyland with a stop at 140 half. Look for targets of 148 here. BPCL and we had buys on HPCL and BPCL earlier as well. BPCL again remains a strong buy. Keep a fresh stop at 350. Look for targets of 367. Couple of financial names, and Kotak Bank after a few days of consolidation could be rallying on the upside. So buy here with a stop at 1890 for targets of 1950. And Chola Finance is a buy as well with a stop at 843. Recommend to go long here for targets of 885.
Okay, gentlemen, thank you very much for that. Need to slip into a very short break. We'll come back with the pre-opening rates. We'll also connect with Satyanarayan Chava, founder and CEO at Loris Laboratories on the other side. Stay tuned.